Welcome back, everyone. This is an update about the oil market. WTI prices stabilized nearby $37 per barrel in the latest sessions, performing a small break after the increase it saw in the previous weeks. World economic output has shown signs of stabilization, while the largest oil producers internationally have also adjusted their production to the current conditions. Even though the coronavirus outbreak is not out of the picture yet, lately the news seems to support oil prices, and traders, especially the bulls, are showing more interest for the commodity. This report aims to identify some of the most important updates of the oil market and close with our personal opinion on where the oil market currently stands. We make a start with the weekly US data concerning the oil market. During the closing of the past week, the Baker Hughes oil rig count had dropped from 237 to 222. The decrease in oil rigs has been continuous since mid-March, and demand does not seem to have picked up yet. However, due to the prolonged decrease in active oil rigs, we would assume that once the weekly reading indicates an increase, a change in market sentiment could be nearby. On the other hand, the API weekly reading released a minor drawdown of minus 0.5 million barrels, while the EIA followed the trend with a minus 2.1 million barrel cut. Overall, in our opinion, the weekly readings tend to support crude oil prices. On a separate note, news from the OPEC Plus group in the past days also seem to support oil prices. The biggest producers of the group, Russia and Saudi Arabia, are said to have agreed to extend the current production cuts into July. It's also said that even though the OPEC Plus group is currently aiming at cutting production by 9.7 million barrels per day, some oil producers are still not in line with the deep supply cuts. This implies that the OPEC Plus team can deliver lower supply, but some countries may not be willing to do so in accordance to their clients' demands. We would expect Russia and Saudi Arabia to keep their compliance with the deal as a priority, but smaller producers may need to be cautious as inventories need to remain low until demand starts kicking in for good. Furthermore, some analysts believe that the biggest oil-producing countries like the US, Russia, and Saudi Arabia are aiming to send WTI prices back in the $40 to $50 range in the next months. Some concerns over the oil production levels in the US persist, as the OPEC Plus group may not be willing to put in the work to restabilize the market by itself. US shale producers will have to adjust their current market circumstances if they are planning to stay around. It would be very dangerous for the industry in total if oil prices suffered another significant drop like the one that took place in April. As a conclusion, in our opinion, it could take months until demand is back to normal, and oil producers have to keep a lid on production if the commodities price are to rebound to levels seen prior to the coronavirus outbreak. At the moment, we are seeing a steady rise of prices that could continue, yet any unexpected scenarios that are not currently in focus could help support or weaken prices. We would like to emphasize this as the uncertainty around the global economy's performance and the possibility of a second wave of the virus outbreak is still present. Those are the fundamentals for the commodity. Please stay tuned for the technical analysis. Welcome back, everyone. This is our technical analysis. This is WTI 4-hour chart. Currently, WTI is trading between our R1 39.0 resistance level and our S1 36.50 support level. Even though the commodity initially made its way higher to test the R1 39.0 line, halfway it returned back and stabilized just above our S1 36.50, which confirms this is currently a strong level many traders have in mind. If the commodity moves lower, below the S1 36.50, then the next possible stops are the S2 33.75 level that was tested during the past week, and even lower is the S3 31.0 hurdle. In the opposite direction, a move upwards could send WTI above the R1 39.0 line, with the next possible stops being the R2 41.50 level and the R3 43.45 barrier. Please note the RSI indicator has returned below the 70 level, possibly indicating that prices are stabilizing for the time being. Thank you very much for your time. Enjoy solid trading.